So how important is the consumer to the state of the market rally? Can they keep the economy afloat as the Fed hikes rates? Let's bring in Mike Bailey, Director of Research with FBB Capital Partners. Mike, in terms of the soft landing, are you dreaming?
No, I think there's certainly a chance of it. I think right now investors are getting a taste of what a soft landing might feel like. The interest rates are kind of moving sky high. Despite that, we're seeing massive, growth out there. Companies like Lowe's, companies like Home Depot, et cetera, they're feeling pretty good. I mean, the comment before about buying tons of Halloween goods. If we're in the middle of a recession, are people going to dump their wallets out and buy Halloween goods? That seems like a little bit unusual. So I think we're getting a little bit of a taste of it. I do think going a bit longer term, there's going to be some more volatility. So probably more rate hikes ahead, probably a real recession. Company earnings may start to take a bigger hit. So you could see a bit more volatility, I think, before things balance out. But in the short term, this feels pretty good in terms of investors, watching companies do okay at this point in the cycle.
So if you expect more volatility, what do you do right now? Do you sit on the sidelines and sit in your hands and wait through it? Do you position yourself defensively? Do you do something else?
Sure. So we believe in time in the market. I think if you want to try to be tactical and get in and get out quickly, you've got to make two good decisions. That's tough for most people. So we want to stick with the market. We are generally going a bit more defensive. So we've been adding to staples, utilities, companies like that, starting to just tiptoe a little bit into some growthier companies. E-commerce, et cetera, starting to look interesting. I think we're not quite ready for the full-blown capitulation, go complete risk on. Not quite there yet. We'd like to see a little bit more pain, frankly, on earnings. I think that could really drive a tipping point, maybe next spring. But for the moment, you do want to stay fully invested. Again, plenty of great companies out there, whether it's a safe staple or even move up the risk ladder a little bit. Go with something like a Lowe's or Home Depot. They're pretty compelling.
We had a day last week, I think it was Thursday, where the markets just went crazy, and it made the argument that if you get out and try and get in and out of the market, you're going to miss the best days and really handicap your return. So I'm with you on the idea of staying fully invested. You say earnings are likely in the early innings of a big move down. How can stock prices move up if earnings are moving down?
So it's a bit counterintuitive. I think what we focus on is history. What has happened in past cycles when things are looking terrible, there's a recession coming, earnings are blowing up. If you go back and look at some of those, interestingly, once earnings are really only halfway through the pain, stocks actually start to come back. So that is something we're looking through. One scenario we're kind of envisioning. If you anticipate there's a recession coming, things are ugly, let's say earnings are going to be down 20%, kind of peak to trough. Once you get halfway through that, that could be a very interesting buying opportunity.
You start looking over the next mountain, over the next hill, and that's where the turn takes place. I know you have a couple of names that I'd like to dance you through very quickly: Visa, Danaher, and Diageo.
Absolutely. So just very quickly, Visa, kind of an interesting inflation hedge. If inflation stays high, Visa prices things in in nominal dollars. That's good for the company. If inflation goes low, they can also operate there. Danaher, pretty compelling healthcare company. They're actually getting rid of the non-healthcare business. They're going to bring in some more cash. They're going to do some more deals. They've really run this playbook before. Stocks trading at a discount. Diageo, pretty interesting kind of safe defensive company. There is this long-term shift towards premium spirits. So that's something you can own, that growth rate. And oh, by the way, it's trading at a discount. Some pretty interesting companies out there that you should take a look at.
Mike Bailey, thank you very much. We appreciate your time today.
Thank you.